welcome to DA3 exam technique presentation. My name is Cryford Mumba. Quickly we go right to what we want to cover today. The first thing is we have to understand what constitutes DA3 exam paper. The paper is divided into two sections. There's section A, which is composed of multiple choice questions. Each of those questions has got 2 marks, and all that candidates are required to do is to choose the right option for each question. Section B is made up of 2 parts as well. There's the macroeconomics part, where candidates are required to select 2 questions out of the 3 questions that are given. Then there is the macroeconomics part, where again candidates are required to choose 2 questions out of the 3 questions. So the total number of questions that is students or candidates are supposed to answer is supposed to be 5. Okay? Now, when answering the questions, it is very important that candidates understand the verbs that are used in those questions, because it is those verbs that help understand what is required from that particular question. Common verbs that are used, we have something like explain. When the question says explain, you need to give detailed reasoning for the situation that is given. When the question says list, it means that you just have to raise a few points here and there. When the question says distinguish, it means that you are looking for the differences. When the question says contrast, you are looking for the differences again. But when the question says discuss, it means that you have to look at both sides of the situation, the arguments for and the arguments against. It is always very important that students understand these verbs so that they can provide the correct answers. For example, if a question says explain the functions of money, and then you just list a function like money as a medium of exchange, then you won't earn the full marks because you have not explained, you have just listed. So I encourage candidates to be able to pay particular attention to the verbs that are used in the questions. Performance in the past examination papers in DA3 has not been very good. It has always been below average, standing at about 40%. There has been a lot of issues that students need to attend to. Some of the causes for poor performance has been attributed to apparent lack of preparation for some candidates. It seems they seem not to have gone through the entire syllabus. In some cases, students have gotten very low marks because they have provided fewer and fewer points than what is available for the questions. In some cases as well, we see students not answering the required number of questions. Where you are supposed to answer a total of 5 questions, some students will answer 4 or 3 questions, which basically is not supposed to be done. It is surprising that even multiple choice questions sometimes are left out and answered. The other reason that is very critical, particularly in the area of economics, is that the quality of graphs that the students have presented are very poor, and it is an encouragement that students should learn how to draw the graphs. The graphs must always be labeled. The graphs must have the proper axes as required. Calculations and conclusions from those calculations have always been a source of concern as well. Some candidates would do the proper calculations which are correct, but then when it comes to interpreting, that is always a problem. So candidates are required to understand the calculations and then do the proper interpretations as well. Okay, in this presentation, we'll be able to highlight a few points on each of the units, but the core discussion the core discussion will be on the main topics, that is demand and supply analysis, the market structures, the cost of production, national income determination, as well as international trade. These will have to be highlighted in brief. Quickly, we move on to Unit 1, which deals with Introduction to Economic Concepts. And the weight of that particular unit is just a 5%, which means that candidates are not supposed to concentrate more on that, because the examination arrangement is that where 5 marks or 5% is allotted, then the questions that must come from there would have to attract 5% or less. So Under the introduction to economic concepts, what students are required to understand are basics of economic problem, issues of scarcity, choice, and opportunity cost. In line with that, candidates are supposed to have a thorough understanding of the production possibilities curve. What are the factors that can lead the production possibilities curve to shift and the direction of that particular shift? They are also supposed to interpret the points that are found on the production possibilities curve, those that are falling on the curve, those that are falling inside, those that are falling outside. What do they mean? That is always very important in interpreting the production possibilities curve. It is also important to apply the same to economic growth, because in simple terms, economic growth represents the outward shift of the production possibilities curve. So candidates must be able to explain the type of a shift that would have to occur and the direction of that particular shift. Economic development is another area that is briefly covered. Particularly, candidates are encouraged to understand the stages of economic growth as given by Rostow model. These are the key issues in Unit 1 that candidates must venture to understand. There has been some questions in the past on this Unit 1. Okay, in December 2018, question number 2, there was a question dealing with production possibilities curve where various points were given and the candidates were required to explain what those points were supposed to be. The next part of the same question required candidates to understand what factors would lead the production possibilities curve to shift, and the candidates were also required to bring out the characteristics of public goods as well as merit goods. So it is very important that candidates can understand these basics as we have alluded to. So let's quickly move on to the second unit, which deals with the price theory. The most important thing in this particular unit is to understand demand and supply. And in order to understand demand and supply, we'll have to briefly look at what is demand, what is supply, and so on. So quickly we move on to that. What is demand? Demand is simply the quantity that of a good that buyers are able and willing to buy at a given price. And there are many factors that affect the demand for a given product. One of them is the price of that particular good, the income, the prices of related goods, as well as the taste, expectations, and so on. These factors will always influence the quantity of a good that people can buy. It is always very important as well to distinguish between movement in a demand curve and a shift in a demand curve. A movement in a demand curve is caused by a change in the price of that particular product, while a shift is caused by a change in any other factor that affects demand other than the price of that particular product. The shift of the demand curve may either be to the left or to the right. And it is very important that candidates understand the direction of that particular shift. I have provided some example of the distinction between the two. We have movement in a demand curve there where we have the single demand curve as the case is, but the other side is the shift in the demand curve where we have the rightward shift, which generally is called an increase in demand, and the leftward shift, which is deemed the decrease in demand. So this distinction is very important because when it comes to analyzing equilibrium, one would have to bring out the differences. Okay, let's quickly move on to the other side of the equation, which is the supply. Supply is the quantity that sellers are willing and able to sell at a given price. And there are many factors as well that affect the quantity supply, including the price, the prices of related goods, where we have complements and substitutes in production. We have the costs of inputs, technology, the weather. These are some of the common factors that influence supply. It is also very important to distinguish between movement along a supply curve and a shift in a supply curve. movement along a supply curve is caused by changes in the price of that particular good, while a shift is caused by a change in any of those factors affecting supply other than on price. We have an illustration of the movements, the shifts and the movement as well. The first graph shows the movement along a supply curve when the price of that particular good changes, and the second graph there tells us the shift in a supply curve, which could be to the left or to the right as the case might be. Okay, now having looked at demand and supply, we now come to equilibrium price and quantity. By equilibrium price, we are saying this is the price where demand is equal to supply. Equilibrium quantity is the quantity where demand is equal to supply. Now, when we want to illustrate graphically the point where we have the equilibrium price and equilibrium quantity, there are a few steps that we need to take into account. First thing is that you need to draw the initial equilibrium. How do you do that? You need to draw the initial demand curve and the initial supply curve, and where they intersect, that is the initial equilibrium. Next, you need to look at, from the information given, the event that is given. Does it affect the supply curve or the demand curve? Once you have done that, the next thing is to understand what will be the direction of the shift in the demand curve or the supply curve. Once you have done that, then the next thing is to know what has been the effect of that particular shift on the equilibrium price and equilibrium quantity. This is very important for candidates to take note of, because there has been situations where people are asked to answer a question on demand and supply analysis, and they only provide a single supply curve, a single demand curve, instead of, because we need to understand that equilibrium always relates to the demand curve and the supply curve interacting. So it is very important that we understand how this is supposed to be done. I have an example here of what happens when there are changes in equilibrium as a result of a change in supply or a change in demand. The first graph on the left there tells us what happens when there's a rightward shift in the demand curve. We see that a rightward shift in the demand curve would normally increase the price or equilibrium price as well as the equilibrium quantity. When there's a leftward shift in the demand in the supply curve, the effect will be the opposite, where the price would have gone down and the quantity would have gone down, but the price would have gone up, which was quite something else. Okay. The other question asked candidates to explain any 4 arguments that are in favor of privatization. It is very important that we understand as well that privatization is a change from a company that is owned by the government to or into the private hands. And what are the advantages? Why that would have to take place? So it is imperative that we understand this as well. The disadvantages are one of the issues that we need to address as well. Let's move on to Unit 4, which talks about the cost theory and profit maximization. This is rated 10% in the syllabus, and it is a very important topic. What we are required to understand here are the issues of how we can do the computations. This is an area where various calculations are supposed to be done, and we will quickly go through some of the equations that we are supposed to use in order to answer a question in this line. We have what we call the family of total costs. What we need here to understand is that we have the fixed costs, which are costs which do not change with the level of activity. We have the variable costs, which are costs which change with the level of activity, meaning that when nothing is produced, variable costs would have to be 0. And the total cost is the sum of total fixed cost and total variable costs. The simple formulas for average costs that we are supposed to use is average fixed cost is total cost divided by the quantity. Average variable cost is variable cost divided by the quantity. Average total cost is total cost divided by the quantity. And then marginal cost is simply the change in total cost divided by the change in quantity. It is basically an increase in total cost when 1 unit of a product is produced. So, having those equations, we are able to fill in any question that we may be asked. I have an example with me here of the various costs that we can find from the given information. I must hasten to mention that once we are given the quantity, we are given the fixed cost and the variable cost, then we can fill in the rest of the columns using those equations. Because as we have already established, total cost is simply variable cost column plus the fixed cost column, and then the average total cost will simply be total cost divided by the quantity, and it goes on like that. So once we know the formula that we have established, it is very easy to fill in the table. And I must mention here that the proper way of answering a question on cost of production must always take the form of a table. A table like this one is what we expect students to provide when answering a question like this one. There are times where candidates would work the question using 4 pages, 5 pages, which is not supposed to be the case. All that is required is put up a table and fill in the columns, and then the issue is done. Once we have calculated these curves or these costs, it is also very important that we understand the shapes that they take and understand and explain why they behave the way they do. It is imperative to take note that the marginal cost curve, the average total cost curve, the average variable cost curve, they all trace out a U shape, meaning that they start high, but they fall as more and more units are produced before rising again. And this basically is as it is supposed to be because of the law of diminishing marginal returns. While the average fixed cost will continuously fall, okay? The average fixed cost will continuously fall as more and more units are produced. It is imperative to understand why these shapes are there. Now, there are properties that we need to understand of the curves. Number one is that marginal cost eventually rises with the quantity of output. The average total cost is U-shaped, as we have already said. The marginal cost curve crosses the average total cost at the point where the average total cost is supposed to be the lowest. In other words, it is at the minimum point. That is where these curves will have to cross each other. That is very important because the graphs, the curves that have been produced in the past examinations have not been very, very impressive. So candidates must practice how to draw these curves from the information that might be given. We move on to the distinction between the economist's profit and the accountant's profit. Profit is generally defined as the difference between total revenue and the total cost. For the economist, profit is measured by considering total revenue, and then we subtract the explicit as well as the implicit costs. Explicit costs are costs or out-of-pocket costs, while implicit costs do not involve the direct outlay of money. In other words, when economists calculate profit, they always take into account opportunity cost, which is the second best alternative that is forgone. For the accountant, profit is simply the difference between total cost and total revenue and the total cost. In that particular sense, what we see is that the economist's profit will always be lower or less than the accountant's profit because the accountant will not take into account the implicit cost. There are many questions that you might be given which will require you to distinguish between explicit and implicit cost. From there, you need to calculate what the profit is supposed to be. And in many cases, once the calculations, you are required to make a decision as to whether the person made the right decision by undertaking the activity that one has undertaken in line with the economic profit reasoning. Okay, in June 2018, question number 4 had asked candidates to calculate various costs and use them to determine the output and the price where the the profit would be maximized. What was required is to use the table that we had already highlighted to determine the various costs, and afterwards then profits would have to be maximized at a point where marginal revenue is equal to marginal cost. That point could easily be pointed out once the correct figures have been calculated in the table. So once you calculate the table, it becomes easier to work out what cost would arise. Unit number 5 talks about market structures and competition. This is allotted 15%, so it is a very important topic. What we need to understand in this particular case is what are the characteristics of different market structures where companies operate in. We quickly move on to identifying what these market structures are. We have monopoly. A monopoly is generally where you have a single firm. Oligopoly is where you have a few firms. Then we have monopolistic competition, where you have a few firms that will be selling the product and the product is differentiated. Then lastly, we have perfect competition, where you have many sellers but the product is identical or homogeneous. There's a summary of the characteristics of each of the market structures that we need to understand so that we don't confuse the market structures as has been the case in the past. Perfect competition is identified by the following characteristics. One, there are many sellers of a product and many buyers of a product. The second characteristic is that each seller is a price taker, meaning that none has influence over the price, and as a result, the demand curve is a horizontal straight line. Next one is that the product is homogeneous, meaning that it is standardized. What each seller sells is exactly the same. And another very important characteristic is that there is freedom of entry and exit because there are no barriers. So companies can join in the industry and leave the industry such that in the long run, companies operating under perfect competition must only make normal profit. Next one, we have monopoly. Monopoly is at the opposite side of perfect competition. Here, the defining characteristics are that there is only a single company, or a single firm that sells a certain product. That particular product is unique. It is different from what others are selling. The other characteristic is that the monopolist is a price maker, decides what price to charge for the product. And then the other characteristic is that there are very strong barriers to entry. These barriers may take the form of economies of scale, may take the form of government regulations through patents and property rights. They might take the issue of cost that might be too high for other companies that may wish to join. So we need to understand what barriers they are and what are the consequences of those barriers.
Take your career prospects to the next level with Zika.
Our diploma in accountancy is an essential qualification if you're planning on entering the accounting profession.
The Zika tax program at both certificate and diploma level equips you with an enhanced understanding of the field of taxation.
Our diploma in public sector financial management is ideal for accountants or trainee accountants working in the public sector.
And CA Zambia, a respected designation designed to ensure that graduates are highly trained to hold senior positions in the workplace.
You can study through flexible options like self-study as well as part-time or full-time through our accredited tuition providers.
Zika sponsors the top CA Zambia graduate to the One Young World Summit for Young Leaders and also offers scholarships to the top university accountancy graduates from recognized universities.
Visit zika.co.zm now for more information or find us on Facebook and LinkedIn.
Don't delay, your future awaits.
The third market structure is oligopoly. In oligopoly, this is a market structure where there are very few sellers. The best example that we can give in Zambia is the mobile phone industry, where we have 3 players. Okay. The other characteristic is that the firms in this particular market are very much interdependent. Whatever one firm does, the others will notice and will respond accordingly. And the other is that each firm is a price searcher. Before deciding on what price to charge on or for the price or for that particular product, the firm will look at what competitors are charging. It is always very important that we understand that the demand curve that faces the oligopolist is what we call a kinked demand curve, because it has a kink and it arises because of the same issue of firms being very much interdependent. Last market structure is monopolistic competition. Monopolistic competition is a market structure which has the elements of both perfect competition and monopoly. What are these characteristics? Number one is that there are a large number of sellers and buyers for a product, even though they are not as large as under perfect competition. The second characteristic is that the product is differentiated as far as the buyer's point of view is concerned, and this gives the company to have a downward sloping demand curve, like the demand curve for monopoly, even though the slope generally is not as high as that which we find under monopoly. Lastly is that there's freedom of entry and exit. Companies can enter the industry and leave the industry at will because there are no barriers to entry. Again, the end result of this freedom of entry and exit is that firms operating in this market structure will only make normal profits. Next, we have an illustration of the profit maximization for a perfect competitor. A company that is operating under perfect competition, how does it maximize profits? It is very important that candidates understand how to draw these graphs. To show the profit maximization position, what we need are the marginal cost curve, average total cost curve, as well as the marginal revenue curve, which is a horizontal straight line under perfect competition. The condition for profit maximization, as alluded to earlier, is that marginal revenue must be equal to total cost. Sorry, marginal revenue must be equal to marginal cost. In that particular sense, you drop the line from the point of intersection until you touch the ATC and take it to the y-axis. The total profit can easily be seen as shaded in the graph. It is also important that candidates understand what happens when the firm is minimizing losses, where that happens when the total or the average total cost is above the marginal revenue curve. In other words, when it doesn't cross the marginal revenue curve. A monopolist profit maximization is also illustrated there, where we can see the demand curve is downward sloping. The marginal revenue is always less than the price and less than the demand curve. And the marginal cost, as usual, it is similar to what we find in perfect competition. The profit maximization condition is that marginal revenue must be equal to average revenue, or must be equal to the marginal cost. At that particular point, as we can see, we have a point where profits will be maximized, which is indicated as the Qmax in the graph, and the monopolist will move up until the demand curve is touched. Once that point is reached, then take it to the y-axis and the total area is shown there. Now, what we see from here is that the monopolist charges a higher price than what a perfect competitor would charge, and at the same time supplies less quantity than what a perfect competitor would supply. In that particular sense, that is the reason why government intervention is normally required for firms operating under monopoly. Now, there has been a number of questions in this unit as well. Okay, there has been a number of questions in this particular unit. Common problem that candidates have faced is where they fail to distinguish between or among these market structures. A question would ask candidates to particularly what are the characteristics of monopolistic competition, and what we find are the answers that give the characteristics of monopoly. So candidates are urged to understand the characteristics of each of the market structures to be able to do well in this particular topic. Candidates are also required to draw the right graphs as the case is. Particularly what happens when there's a long run position, we need to be able to illustrate that without any problems. Once we are able to do that, then we'll have no problems whatsoever in as far as this topic is concerned. Unit number 6, let's move on to macroeconomics part, starting with unit number 6, which deals with national income accounting. What are we required to understand here? By the way, the rating for this particular topic is just a 5%. Okay? We are required to understand what is national income accounting, how is it measured, and once we understand how it is measured, then we need also to understand what are the limitations of national income accounting and the reasons why national income accounting is carried out by countries. National income accounting is basically the value or market value of goods and services that are produced in a country in a given year. And there are three methods that we need to understand that are used to calculate or measure national income as the case might be. We have the expenditure method, the income method, as well as the output method. It is imperative that candidates understand what these are all about. Later, candidates are required to understand, as I have said, the issues to do with why is national income important to the country? Why should countries calculate national income statistics, which may cost a lot of money? And then what are the limitations of those? Remember, the basic issue is that just like companies can calculate profit and loss at the end of the year, countries as well must calculate national income to know how well they are performing. Is the economy growing, or is the economy not growing, or it has remained constant? So with those, it is imperative that candidates understand what is required to calculate national income. We move on to another important topic here, which is aggregate demand and aggregate supply. This is a topic where calculations are supposed to be performed as well, and it is very easy to understand what is required to be able to calculate that. Remember, aggregate demand is simply the total demand for goods and services in an economy. And we calculate the aggregate demand using the same formula that we have for expenditure method of national income accounting, where we have C plus I plus G plus open bracket X minus M, where we have, of course, C being consumption expenditure, I investment expenditure, G the government expenditure, X the exports, and M the imports. It is always very important that we also understand what will cause the demand or the aggregate demand curve to shift. It is basically these same factors. Whenever C changes, I changes, G changes, X changes, and M changes, then the aggregate demand curve will also shift. Aggregate demand is defined as the total demand for goods and services produced or services in an economy. Aggregate demand is the total demand for goods and services in an economy. And we use the same equation that we use for calculating expenditure method of national income accounting, where we have C plus I plus G plus X minus M, where C stands for consumption expenditure, I for government investment expenditure, G for government expenditure, X for exports, and M for imports. It is very important to take note that whenever these variables change, the aggregate demand will be able to shift. It is also important for us to understand what is meant by aggregate supply, which is the total supply of goods and services in an economy. The aggregate supply, just like the supply for an individual good, will generally be upward sloping, and the aggregate supply is affected whenever labor, capital, and natural resources like inputs change. So whenever those factors that we call factors of production change, then the aggregate supply will be able to change. How do we determine equilibrium national income? To determine equilibrium national income, we need to understand the distinction between withdrawals and injections. Equilibrium normally occurs at a point where injections are equal to withdrawals. It is important to identify what are the injections in an economy. Basically, the injections are made up of investment, government expenditure, as well as the exports. Meanwhile, the withdrawals, on the other hand, are the savings, the tax, as well as the imports. Savings, tax, and the imports are the the withdrawals. It is also important to understand what is the distinction between an open economy and a closed economy. A closed economy is one which does not have foreign trade, where there are no imports and exports. As a result, the condition or equilibrium condition is simply investment being equal to savings. But when we have an economy which is open, the equilibrium position is I plus G plus X is equal to S plus T plus M. And it is also important for us to understand the consumption function. Okay? The consumption function is generally represented as A, or C is equal to A plus BY, and the savings function from the consumption function, savings are what remains after income has been spent on consumption. So aggregate demand from that particular point of view, we include the consumption function. Now, these are some of the very important equations that are required to be able to answer any question which deals with determining national income equilibrium. Let's quickly show what the consumption function is all about. The consumption expenditure represents the income spent on consumption. And there are two versions to this particular function. It's either the whole income is spent on consumption, or indeed the consumption is more than what someone's income. So we have C is equal to Y, where all the income is spent on consumption, and then we have C is equal to A plus B plus Y, when we have some consumption that is independent of someone's income. And when drawing that, it is very important to be able to show graphically where that occurs. It is also important for candidates to understand and calculate the marginal propensity to consume, which basically is change in consumption divided by change in income and the factors that influence the marginal propensity to consume. National income equilibrium using the 45 degrees graph is very important in this particular syllabus. And you can see the two equations that are there. On the y-axis, you have the national or the planned expenditure, and on the x-axis, we have national income. Where those two are supposed to intersect, that is where the equilibrium occurs. It is also very important to note that there has been a number of questions relating to this. One of the questions that was there was in December 2018, question 4A, where candidates were given some variables on I, C, and so on, and they were required to determine the equilibrium national income. One common issue was that candidates were able to identify what was supposed to be done, but then when substituting equations, that is where the problem was. So candidates are advised that they must practice this so that they can understand what exactly to do with equilibrium questions. We move on to Unit 8, which deals with the monetary and financial environment of the business, which carries 10%. What we are required here to understand are issues to do with the financial intermediaries. What are the roles of financial intermediaries? What are the functions of the commercial banks? What are the functions of the Bank of Zambia? And of course, understand the issues of monetary policy. What are the tools that are used by the Bank of Zambia to influence money supply, to influence exchange rates and interest rates? Okay, it is always very important that we don't make a mistake where people tend to look at monetary policy and confuse it with fiscal policy. So in this particular topic, again, there has been a number of questions. Candidates were asked in December 2018, question 7A, to understand what are the functions of the Bank of Zambia. Some people were providing the tools, the monetary policy tools, instead of getting the functions as required. There was also a question which required candidates to explain monetary aggregates. Candidates were simply required to understand what constitutes M0, M1, M4, and so on. Candidates can elaborate and understand why financial intermediaries are very important. Because we know that raising funds would always have to involve the financial intermediaries, which normally go as between the surplus units and the deficit units. So Very important to understand what are the functions of these financial intermediaries and who they are. Next one, we'll look at Unit 9, which deals with international sector. This unit carries 15%. And here, what we are supposed to demonstrate understanding of is international trade. What is international trade? We know that international trade is trade between countries, and we need to demonstrate as well what are the benefits that countries get when they engage in international trade, as well as particularly the issue of theories of international trade. Here we are supposed to do the calculations of absolute advantage and comparative advantage. Remember, absolute advantage occurs where one country can produce a good using fewer resources than its trading partner. Comparative advantage, on the other hand, concentrates on the opportunity cost. So we need to calculate the opportunity cost for each and every good, and where the opportunity cost is lower, that is where the country has has a comparative advantage. There has been many situations where candidates would calculate just 2 ratios or so on, but it is important to note that for comparative advantage, you always need to calculate 4 ratios. Candidates are also required to understand why countries erect barriers to trade. What are the reasons that are given why countries put barriers to trade and what those barriers are? So, the barriers to trade are erected for various reasons, and the barriers to trade involve tariffs, quotas, and so on, which candidates are supposed to understand and explain very well. It is always very important to be very clear on the distinction between barriers to trade themselves, the types of barriers that countries use, and the arguments for or against the use of those barriers. Because one common problem or mistake that candidates make is the question will be asking them on the arguments, and then they will put the barriers. Or the question is asking them on the barriers, the types of barriers, and then they'll put the arguments and vice versa. It is important to be very clear on this and other related matters. Balance of payments is always very important. Candidates are required to understand what constitutes the balance of payments, the current account, the capital account, as well as the official reserves. And when there's a balance of payments deficit, how can it be rectified and corrected? Candidates are also required to understand exchange rates. It is important to understand the exchange rate systems, the fixed exchange rate system, the floating exchange rate system, as well as the managed float. These, with their attendant advantages and disadvantages, must be understood. So, all in Unit 9, what is required is candidates must be able to calculate comparative advantage and absolute advantage. That is always very critical. There has been some questions, of course, in the same topic, but I gave some illustration of how to calculate the comparative advantage using the same 4 ratios, as I have already alluded to. The questions that have been asked in the past relate to question number 5A in 2018 December. It asked candidates to calculate absolute advantage from the information that is given, and then the other part of the question required candidates to calculate comparative advantage, and after those calculations determine which country has a comparative advantage in what product, so that trade between the two countries can be undertaken. Lastly, unit number 10 deals with government macroeconomic policy, which is rated 10%. Here, what candidates are required to understand are the issues to do with the economic problem. Understand what is unemployment, what causes unemployment, how is unemployment measured, what are the types of unemployment, what should the government do in order to correct the problems of unemployment, including the costs of unemployment when it is very high in a country. Candidates are also required to understand the issue of inflation. What is inflation? What causes inflation? How is it measured? What is it that the government can do to reduce the rate of inflation. It is very important here to distinguish between fiscal policy as well as monetary policy in as far as addressing these is concerned. So very clear, we know that fiscal policy is always concerned with government expenditure and taxation, while monetary policy is concerned with control over interest rates, money supply, and exchange rates. There are many problems where candidates will confuse monetary policy instruments as well as the fiscal policy instruments, where someone is giving answers on monetary policy, but one ends up putting taxes as a policy measure. Questions as well have been asked in the past regarding this particular topic. Question 7B in December 2018 asked candidates to explain 4 macroeconomic objectives, emphasizing how they are measured and their importance in an economy. Basically, what was required here are issues to do full employment, balance of payments, equilibrium, economic growth, lower inflation rate, and among others. Candidates were also asked to basically itemize how these might affect the economy, and it is important that candidates would relate what happens when balance of equilibrium is achieved, what happens when there's full employment, and what happens when there is a low inflation rate. In conclusion, in this paper, it is imperative for candidates to understand that you understand the following things. Number 1, economics has got its own language which must be used when answering the questions. Number 2 is that candidates are required to study the entire syllabus, because it has been noted that in some cases candidates concentrate on either micro or macroeconomics, but you should be able to understand and study the entire syllabus. Candidates are also required to answer the required number of questions to score good marks. Candidates are also required to avoid question spotting, where just a few topics will be studied and then expecting that the exam will come from there. The fact is that the examination comes from the entire syllabus. So read the entire syllabus and then you'll be prepared. The last point is that you need to consult the past papers. The examiner's reports are very important to guide you on what is required when it comes to answering questions in DA3. I wish you all the best in your future exams. For further information, you may contact Zambia Institute of Chartered Accountants. Thank you.